against the dollar. But it's not the DAX itself, it's the DAX and the euro against the dollar. So it's the DAX in dollar terms. You can see just how like the lines are, of course, because you're adding a dollar element to the price of the DAX. So you're taking out the euro's involvement effectively in the movement of equities. This is a very nice thing to look for, because when you get discounts that seem to be in line with the shape of the markets, or premiums that seem to be in line with the shape of the markets, opportunities present themselves. So when I go backwards, for example, here, I go into this area here, you can see that during this little phase here, there was a very, very big premium for the trade there. Do you see that massive premium? I see the trade and I look for that and I say, there's the short sale on DAX right there. Remember, it should be in the direction of the slope. So I'm going in the direction of the black line. If I'm trying to sell it, I want to see the black line dropping and the red line making higher highs or lower lows. So when it's rising like this, I don't see any trade. There's no trade for me to get involved in that trade at the top edge. As we come into the trade here, you can see that there was another opportunity for me to sell into this trade here. There's a very, very clear example of getting an opportunity, trading that opportunity, and going in the direction of the move. There has to be a direction on the move. Otherwise, there's not really going to be a trade. I had another opportunity to do another trade right there. You see the direction is very established. You can see that we're going in the wrong direction, and I can take advantage of that very obvious arbitrage divergence, correct? As we came into the bottom edges here, one of the things that you started to see was that we started to see this macro value divergence. Now, before it happened, we had a very obvious sell opportunity there. But as we came into the bottom edge, you were starting to watch this, because obviously this was a key price for the S&P as well. And obviously from that point onwards, you can start to watch to see if anything happens. And you can see there was another nice opportunity to buy the DAX just in there. It seems to line up beautifully with the overall shape of the red line, black line relationship. Again, another opportunity to buy the DAX in there. And again, another opportunity to buy perhaps even this late stage in here. Another opportunity to buy at that late stage there. Now, obviously, as you go forward, you can start to recognize some of these stories and some of these opportunities. It became massively overpriced in here, didn't it? Massively overpriced on these peaks. And you can see that there was just simply the opportunity to work short selling all the way through that whole process, massively overpriced. When it tested back into the lows, take a look at what happened at the very low price. This is as good as it gets. You see how beautiful that is as a buy trade? Okay, so let's take this off the screen for a second, and let's look at the possibility of what these little value divergences in the opposite direction, significant opposite direction to the overall price, just even these last few. And if you wanted to take a look at this one here as well, because that looks very, very exciting there as well, let's take a look at those for a second, and let's see if they offered us any opportunities to trade the DAX. So this would be a sell on the DAX here. And this would be a sell on the DAX here. And this would be a sell on the DAX here. And this would be a buy on the DAX here. Do you see how nice those trades could have developed into? From a sell on the DAX, a sell on the DAX, and a sell on the DAX, and then you bottom tick the DAX. In essence, it's effectively just looking at the price of equities against the dollar. You understand that? In essence, that's all you're doing, is looking at the price of equities against the dollar, but what you're doing is you're converting the DAX simply from the DAX itself to the DAX priced in dollars. And then you're looking at the dollar itself and saying, well, how does it set up? And it's just that simple little play with words that simply changes people's perspective just enough to get them to realize that there is a trade in there to be had. Oops, I keep pressing the wrong button. There it is. There is a trade in there to be had. So when I see these trade opportunities, I can see it gets a little bit overpriced here, and I see it gets a little bit underpriced there. It's a little bit overpriced here. It's a little bit underpriced. Well, those are edges. Surely to goodness, those are edges. So if I see it gets overpriced in there and underpriced in there, I've got an edge to maybe do some business here in the DAX. I'm just looking at it from a different point of view. So it's overpriced on the big uptick here. It becomes overpriced there, and it suddenly becomes underpriced there, and I can do a swip. A swip? It's a new one. I can do a switch from sell side to buy side, and obviously rip the proverbial right out of the buy side trade right there. And again, it's just a different idea of looking at it from perspective, isn't it? It's that context that you simply just ask a different, slightly different question, and you say, what am I looking for here? And how can I see it in a slightly different way? The speed, the direction, you can see that there was a change in the relationship in there, suggesting that the DAX may be starting to get a little bit overpriced in that candle there. And then there was a nice sell opportunity there because it's now sloping to the downside. You see that? It's now sloping to the downside. And if it's now sloping to the downside, that might be a profit take there, but this is a sell trade here. So we would say, right, we're going to book profits there, but we're going to get net short there. So when we see that in terms of its context, and we look at it, you can see that you're going to take profits there, and you're going to get net short there. And obviously the net short is the current short sell that we've seen on the DAX dropping down from 620 to 600. It's the DAX in dollars, it's the DAX in dollars and the dollar itself. So it's just looking at the dollar itself and the DAX in dollars. It doesn't really mean anything. I mean, the line, let's be honest, the line actually doesn't mean very much, except for the relationship idea. It's a different way of just simply asking the same question. But when you think about it, all of a sudden you start recognizing, wait a second, there's an incredibly strong relationship here because the euro causes it to have a very strong connection. And it becomes even stronger. Look at those lines. They are almost 1.0s, aren't they? You see that? They are almost 1.0s. But can you see when the value changes dramatically? Not on a candle by candle basis, but when do you see when the value changes dramatically? Well, you should be able to spot some of these areas. You can see that the value changed dramatically, for example, at this bottom edge here. The red line's making lower lows, the black line isn't. You can see the value change dramatically into that bottom edge there. You can see the value change dramatically into that top edge there. Would anybody disagree with any of those? On a macro scale basis, would they be the ones that stand out for everybody? I think they probably would be the ones that stand out for everybody. So if those are the ones that stand out for everybody, would it be reasonable to think about the buy trade in here, the buy trade in here, and the sell trade in here? Well, if we look at those areas, you can see that that was exactly where the big buy trade on the DAX came from the cash open for that big rally. You can see that the buy trade that came in here was the perfect bottom edge on the DAX the previous day for that big rally, and the sell trade was the big sell side bounce in the afternoon session. So when we see that these give us these incredible valuations based on something that is a very high positive correlation regardless, we can start to recognize that we can pick up on those even on the 1 minute charts on a candle by candle basis and still create a very small edge for ourselves just to step into the markets at that point. Pretty good stuff, right? Pretty good stuff. But it's just about being clever, guys. It's just about being clever, isn't it? It's just about being a little bit, you know, looking at it from different angles, contemplating what's happening in the background, and then saying, you know what, I've got a small edge to take a sell into the markets there, and it made money. Now you've maybe got a small edge to think about the possibility of starting to buy on downticks. You're thinking about the possibility of a small edge, but the black line is falling, so I'd like to see the black line turning back up again, and we could start thinking about the possibility of bidding a low price on the next little swing. But there is bigger swings. There is that bigger picture to bear in mind. Make sure you don't lose sight of that bigger narrative. The red line is way above the black line in total terms. I mean, just on point-to-point basis, the black line is flat pretty much from that price. The red line is massively premiumed. So we do have a top edge sell coming in on the DAX pretty soon. So we want to be working that top edge sell rather than trying to be buying these little downtick phases here. I would rather be working that top edge sell against a sloping black line. Make sense? Good stuff. Good. Did anybody ask the question and get the answer? Remember we were talking about that sell on oil at $88.15 and we got all the way down to $87. Did anybody ask a question at $87? And did anybody get the answer, buy oil for $1,000? It's almost like Celebrity Jeopardy, isn't it? Can I have US presidents whose surname begin with O for $500, please?